Good evening, everyone. This is James coming to you from Dividend Stock Talk, where we talk about dividend investing with companies to earn weekly and monthly cash flow. Today is Wednesday, August 23rd. It is 10 o'clock p.m. and we are here to find out what's going on for tomorrow. There's a bunch of stocks we want to take a look at for tomorrow. Last night, we looked at one company was worthy of looking at. Didn't do us any good because it wasn't paying quite right. Didn't give me the happy warm fuzzies. All right, let's jump on. That being said, let's jump on in. All right, here we go. All right, that works. All right, we're jumping right on into the marketplace. Yesterday, wait a second, today is the 23rd, so we're going to look at 10 days in the future. So 5 days would be the 30th, and 5 more days would be the 6th, which was today, which was Mosaic, was the only one worthy of seeing yesterday. So we took a look at that, and guess what? Crap, nothing. Actually, it was a good company, don't get me wrong. Great company, nice dividend, but it was just the numbers as an investment was not going where I wanted it to go. But just for the fun of it, let's see what they did today. MOS. Okay, and she opened up today. Look at that. So that could have been a bottom that we found right there. Could have, but strangely enough, see the stock price was going down. All right, let's do a quick analysis of this, real quick analysis. All right. Stock started out the year at 28, jumped up for a day or two at 30, dropped down to find a trading range 24 for about a month or so. And it was a slow climb up to the high of the year, which was 34. From the 34 mark, she drops down to 28, 29, trades there for about a month and a half, and slowly finds a bottom at 23 for a couple of months. And then just recently, she dropped from the 23, 24 area down to the 20s where she is now. So that being said, take a look at the last few weeks. All right, it's a slow down trend. All right, it's going down, and somebody's saying, hey, wait a minute, this is too low for Mosaic. Let me just jump in and buy a few. Well, they do that, and then boom, it's still trending downward. Okay, so what is this right here? Now we have higher lows. See that? Going up. But this one's kind of throwing us off because you have down and higher lows, down and higher lows, and down, and now we have higher lows. However, where does that leave us? Does that mean that tomorrow we could trade Mosaic because it's looking pretty good? Because this could be the bottom where you see right where it is now. Where is it? Right here. See that? This could be the bottom right here. You don't know. And I'm not saying that it is. I'm just saying you don't know. So let's put a Mosaic in and then see what the numbers look like for today. It didn't look good yesterday because the return just wasn't enough. But today, being Wednesday, no, today being Tuesday, tomorrow's Wednesday. Or is today Wednesday? Oh, damn it. It's getting old stuff. It's for the birds. Okay, today's Wednesday, which means you got Friday, Thursday and Friday. That's it. So you can buy tomorrow morning and hold on to it. I'm not saying to do that. I'm just saying you could. Okay. So today was an up day for Mosaic. It opened up lower than it closed yesterday. Okay, not by much, but you know, yesterday she closed at 1994. See the numbers right up right here. Open, high, low, close. Okay, so yesterday she closed at 1994, and today she opens up at 1990. Okay, so the market maker might be telling you, say, hey, this may not be the bottom because he opened it up lower than the close of yesterday. Now, the market maker has a tendency to be the one that leads the field. Okay, he has a feeling that the stock is moving up, so he's going to open it up higher than what it closed the previous day. And he didn't do that today. Today he opened up lower. So is this just, some people say, wait a minute, 19 bucks is kind of cheap for Mosaic. Let me jump on in and get some. Or is this actually the bottom? I don't know. That being said, let's see what kind of the numbers look like. Looking at the option chain here, sliding on over where it says spread. I want to look at the vertical spread. So she closed at 2017, which means I'd be looking at the 19.5 20s. See the 19.5 20s right here. If I wanted to buy one, it's going to be 42 cents. So I'm only going to make 8 cents off of my investment. Now, don't get me wrong. When you're doing a lot, it could be worth it. Okay, but I like to do 50 at a time. I'm not suggesting you do that. I've been doing this for a long time, so I do not suggest. If you're just starting out, 1, 2 is fine. 5, 10 maybe, but 50, no, don't do 50 unless you're really good at this. All right, confirm and send. So I'd be making a maximum profit of $400 for a $2,100 investment. That's about 20%, right? At 550 bucks, 550 bucks would be 25%. So 400 bucks is about, okay, that's feasible. If you can get it for that price, if you can get in at 42 or lower, you did make about 20%. 20% is not bad for 2 days. And Mosaic, like I said, it's good company. That being said, all right, let's jump up and see who we're looking at today. There are 9 companies that we are looking at. So we're going to quickly go through them. But before I do, I had a very good question today. Someone asked me using the dividend capturing strategy, would I hold on to a stock into a government holiday? Okay, so everybody's having the day off, and now I'm assuming on a government holiday or a federal holiday, whatever you want to call it, the stock market's not open. So would I hold it through that day? Not quite understanding, but do I hold them through the holidays? Yeah, of course. It depends. It really depends on what the software says and what the charts say. Okay, if you're coming into, let's say, Labor Day or Memorial Day, everybody has that day off. And if you're holding it into those days, it depends on what the software says. What did it do last year? What did it do the year before? What did it do the year before? What does the seasonality look like? Because the seasonality chart is going to, I'll give you a quickie right here. Here we go. Chart, seasonality, here we go. And this is what the seasonality is showing you. The blue line represents what it's doing today, or what it's doing this year, and the red line is a composite, or an average of the 10 years prior, last year, the year before, the year before, the year before, so on and so forth. So this is what the stock normally does. Now that's a 10-year average, and this is what she's doing this year. As you can see, it's not exact, but it's pretty close. Okay, and the movement, you start out in January, she goes up a little. Ooh. Every time I turn this thing on and I get in this thing, I yawn. Why is that? And I'm not tired, Any time of day I do this. I don't know if it's psychosomatic or not. Back to the charts. She starts out January, she goes up. Okay? That's what it did this year. Get somewhere around the end of February, beginning of March, and she has a tendency to go sideways and down. Okay, see, sideways and down. Okay, get down to about here, you find a little plateau, goes sideways for a bit before she hits July, and then goes down again, and then somewhere in August she levels out again before she hits September, where she goes down, finds a level playing field, and then an uptrend towards the end of the year. Slight, slow mosaic. I don't think it's a Christmas present for anybody, because there's no huge dramatic leaps in price into December and the end of the year. But in the beginning of the year, she does have some nice movement, and then sideways and down for the most time after that. So where is she now? She's in the sideways section. Okay, so would this be a good deal for tomorrow? Yeah. Yesterday it wasn't a good deal because the stock had to move up for us to make money. If we get filled today, we're going to make money if the stock goes up, if the stock stays the same, and if the stock comes down. That's the only way I invest using this strategy. I like to have all things in my favor. I want the stock to be a good quality dividend stock, number one. Number two, I want to have some good historic performances, and I want to have a good reading on this software. And if you're not a subscriber, you don't have access to software. Anyway, no. Sorry. If you'd like to get access to the software, become a subscriber over the 10-Minute Trader. That being said, let's move on to what were we saying? Oh, yeah. So I like everything to be in my favor. I want the charts. I want the trend. I want the software. I want everything floating that way. Then when it finally comes down to the actual trade itself, I want it to be, I want it to make sense, and I want it to be profitable, and I want to be in all three of the direction side. I want to be, if it goes up, I want to make money. If the stock doesn't move at all, it stays the same flat, I want to make money. And if the stock goes down just a little bit, not a little bit, but a little bit, then I still make money. Okay, if we bought it tomorrow morning at the opening, let's say, hypothetically speaking, she opens up at the exact price where she closed today. It's at 2017. Okay, if she opens up at that, then the numbers here should be accurate. Okay, the buy and the sell. Okay, so if the buy is 45 cents, I click on that, and sorry, I click on the buy, and it self-populates. It tells me what I'm buying and what I'm selling, because this is the position I'm in. That's what a spread is. It's a difference between the one you buy and the one you sell. Okay, so if I'm buying the 19 and a half, $19.50, and I'm selling the $20, okay, the difference between the lower one and the higher one is only 50 cents. It's all I'm going to make off this trade, no matter how many shares I buy, no matter what direction, no matter how high the stock goes. Only amount I'm going to make on this trade is 50 cents. That's it. But I'm going to make my 50 cents if it goes up, sideways, or down. It's not glamorous, but it is profitable. So let's get back to here, standard. If the stock stays above 20, now 20 is right here. She's 17 cents in the money. Not a lot, but it's still 17 cents. Now, if you have 5,000 shares times 17 cents, that adds up, okay? Or even, 500 or 1,000, whatever. Besides the point. As long as the stock stayed above $20.17, I can make money no matter what direction the stock goes, up, down, sideways. Because she's at 2017 now, okay? If she stays the same for the next 2 days, Thursday, Friday, I'm going to make my 20-something%. If she goes up, I'm going to make my 20%. If she goes down, even a little bit, there it is again, even a little bit, still make the money. All right. That being said, let's go see who else we're looking at. Now, that was Mosaic. That was today's trade. And it's still profitable for tomorrow. So if you want to do that one, hey, that is up to you. All right. Who do we have today? we have Williams Company, United Health Group, Shire Pick, okay, General Motors, gotta love that, Genpact, never heard of them, Coach, CME Group, another good company, 66 cents, I'm pretty sure that's close to 100 or over per share, CBS Corporation, and Anthem Incorporated. Okay, now we don't look at stocks that below 10 cents. But in this strategy I could, because we're just looking for stock movement. We really don't care about the dividend. Okay, dividend, don't really care, only care about the movement in the stock, because we're not really collecting the dividend on this strategy. We're just using the dividend as a precursor as to what we're looking at next. Okay, so if the software says ANTM, the stock, ANTM, where is it? Here. If ANTM moves up coming into dividend and we buy the option, then we make the money on the option trade. And the option trades can go as high as 50 to 60%. So the one I just showed you with Mosaic is only 20%. But hey, 20% is not bad for 2 days. All right, ANTM, that's what we're looking at. ANTM. Anthem. I have no idea what these people even do. Ooh. That's scary. All right, well, let's give a quick analysis of this. A 70-cent dividend, which is very small for a $200 stock. This baby starts the year out at 127. So last year at this time, this stock was at 127. She had opened up at 127 for the year, and then she slowly went down to the low of the year of 114. Okay. Now, from 114, she heads all the way up to 195, which is where she is now. Now, at 195, this is the high of the year. 196.46. Okay, the stock's at 195.23. It's not at the high, and the high is not really that much higher than where she is now. Now, can it pay out its dividend, the 70 cents? Can it go up 70 cents from where it is now without hitting that high of the year? Yeah, because you're not going to be breaking into new territory. Okay, if it closed at the high of the year at 196, and that's where she was right at this moment, then I would say definitely not, because I don't want to be chasing new highs. Because new highs is like climbing a ladder, standing on a ladder, reaching for the stars. I don't want to be that person doing that. You know, now I don't mind being at 195, trying to get to 196, and there's still plenty of room for my 70-cent dividend. Okay, so that's a good thing. She's in an uptrend. That's an excellent thing. What the software is going to tell you is another thing you have to keep in mind. Now, with that being said, let's take a look at the seasonality before we look at the payment. I mean, what they're paying. Now look at this. Is almost like buy at the beginning of the year, sell it at the end of the year. Or does that just not make sense? You know, you buy it, then it keeps going up, 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 up. Yeah, but it's not profit until you take it. All right. We're here right about now, and let's see what she got for the next couple of weeks. Sideways and then up a little bit, but both basically sideways. So this is doable. That makes me a happy camper. ANTM. Anthem. Waiting for the grid. Now, with a $200 stock, it's going to be a bigger spread because if a stock moves, 1%, it's not a lot of money. It's $2. And if the stock is below 100 and it moves 1%, then it's below a buck, and that's going to be what the option to be close to. Oh, never mind the premiums on the options and all that kind of stuff. Gets a little confusing. The spreads and okay, we're not okay. Back to where we are at the moment. The stock is closed today at 195.23. So I will look at the 195s and the 192 and a half to 195, which is this one lower. Now it's a $2.50 spread. So at $2, at a $2 option price, the maximum I'm going to be making on this trade is $490. It's just a little bit under 500. Okay, and for that, it's going to cost me $2,000. So this is pretty close to a 20% trade also. Now, just for 10 contracts, it's 2,000 bucks. Could you make the money off of this? Could you make the 20% in 2 days? Yeah, would it be great? Why not? If this stock just stayed where it was at the 195.23, or if she goes up, okay, let's say she goes down, Lord forbid she goes down, she has 23 cents to move before I'm actually into the money, eating away at the profits. At 194.51, the profit cease. So anything over 194.51, 194.51, right about there. That's break even. I make the trade, I sell it, I break even at 194.51. Okay, so you have to make sure all the numbers are working in your favor. First, the stock has to be trending the right direction. Second, the software has to tell you, hey, it's been doing this for the last 10 years, and this is the odds and percentages of it hitting the target that we want it to hit. And then I want to check out the charts. What does the 1-year chart look like? What does the 90-day chart look like? And then, very, very, very importantly, what does the seasonality chart look like? How does this thing compare to what it did last year or the year before? Then, after all that being done and said, I want to come over here to actually view the trade and find out what trade makes the most sense, it's safe, and has a high probability of winning. Then, if all that is in my favor, how much am I going to make? And is it going to be worth my while? I mean, would I do all this work for 5% or 3% trade for 2 days? Because tomorrow's Thursday, you get Thursday and Friday, that's it. This is a 2-day trade, the possibility of making over 20% for a 2-day trade. That being said, I would do this one. I'm not telling you to do it, I'm telling you to do your own homework, apart from what I just did, but the numbers all work, the numbers all look right, the charts look good, the direction looks good, the software looks good, and the trending looks good, and even the option price back here, all this, looks good also. And if it all works out, I get a $490 profit off of $2,000 investment, and that, my friend, is over 20%. That being said, I'm going to check see what kind of questions I got, and then I'll be signing out. All right. Questions. No questions. All right. Thank you, guys. So I am going to be catching you guys on another day, another channel, talking about the same thing, dividend investing for a weekly and monthly cash flow. This is James from Dividend Stock Talk. I want to wish you guys a great night and hope to see you live chat again soon.